Economic sentiment appears to be cooling off for the CEE economies as a result of lukewarm growth earlier in the year. Evghenia Sleptsova, Oxford Economics. Well, Hungary's central bank kept its interest rates on hold this week, as expected, though perhaps more surprisingly, Standard & Poor's upgraded its credit rating for Hungary, bolstering its forint and demand for government debt. How then do both of these events impact Hungary's economy moving forwards?
The fact that interest rates were left on hold was not a surprise, was very much as expected, as the central bank flagged the end of the conventional easing policy a while ago. And it has also been warning that it would shift the focus to unconventional tools, which is what it did by cutting the amount of excess liquidity that banks can store at its 3 months deposits. While the markets have priced in and expected an upgrade by at least 2 agencies for a while, the timing of S&P upgrade was quite a surprise, particularly because it came without a prior revision to the outlook, because the outlook was at stable. And so what it means now is all of a sudden some extra funds are flowing into the country.
Okay, and according to a draft proposed by the EU Bloc recently, economic, social and cohesion funds for EU members will be slashed by 24% in 2017. Should this come into practice, then Poland in particular could be hit hard. What are your thoughts on the proposed cut to these subsidies?
Okay, so EU funds are indeed have been one of the key sources of latest pickup of growth in the CEE. And what happens is that the EU funding cycle is 7 years, and the absorption really picks up towards the second half of the cycle. We are now at the very beginning of the new cycle of the 2014-2020 financial framework, and the absorption in the first 3 years would anyway be expected to be low. So we will be waiting for the details on how this will be factored into the whole budget cycle, this reduction.
And lastly for today, how do you assess the economic sentiment in the CEE area as we move into the end of the calendar year?
So looking at the PMIs, sentiment has indeed weakened in the first 2 months of Q3 across the region, hovering around a non-expansion level of 49.50 in both the Czech Republic and Poland. In Hungary, even though it's volatile, PMI hasn't shown a big change in the trend, looking at 3-month averages, but its other sentiment indicators, like the ones produced by the JKI Institute, have been weaker as well in Q3. If there is no pickup in consumption and investment, with external demand also going back to previous levels, then we will see much weaker growth in the second half.
Thank you, Evgenia. Be sure to check back with Dukascopy TV for more updates throughout the week. I'm Sam Meredith, and we'll see you next time.